Today, market historian Bob Hoye from Institutional Advisors believes President Trump is the breath of fresh air needed to get North American business humming again. Danielle Park from Venable Park Investment Council is worried Trump's policies will be dangerous. And Mackey Research's Peyton Nyquist runs down Canada's equity markets. Plus, at the end of the show, we'll have a company showcase update with American Manganese President and CEO Larry Ray. We'll talk to Bob Hoye right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to This Week in Money, Bob.
Jim, good to be with you, and also I'll say good to be with our listeners. Always enjoy it.
Donald John Trump. I didn't know the J stood for John, but I do now. Sworn into office on Friday, and his message to the American people was he would wrest the power from the establishment of Washington, D.C., and give the power back to the people. He would hire American first, and everything he does will be for America. What kind of a message is he sending, and is this good or bad news for Canada?
Well, I find the message absolutely terrific. The theme I've been working on for decades now has been that history has been on a nasty experiment in authoritarian government. And in the last 2,000 years, there's only been two of them, thank goodness. It was the 3rd century when Rome was turned into a police state, and then the 1500s when a benign Catholic Church was turned into a police state. And then you've had the 20th century and still running with a lot of horror shows due to an experiment in unlimited government. And one of the things, Jim, I found with these previous ones is that once the experiment got going and the message was there, it was very difficult for independent people to resist it or to criticize it. Try criticizing big government in Moscow in the 1930s, So let's call it political correctness out of control. So what happens, it seems, is that the experiment of intrusion in everybody's life and expending everybody's money goes until it's quite simple. The money starts to run out. And the people then become aware, and we can call it a popular uprising. And there's a historian, Barbara Bell, in the mid-'70s, published some papers on popular uprisings prompting dynastic changes in ancient Egypt, 4,000 years ago. And what it was essentially is that the governing classes end up living very well, and they give promises to everybody else how wonderful things are, and then everybody else says, hey, it's not so wonderful. And then at a moment, the authoritarians lose the will to impose power, and at the same instant, it seems that the general public loses the complacency and says, hey, enough of it. But the real hinge on this, Jim, I think, is that for the last 25 years, there's been no net advance in take-home pay by the average person. And whereas prior to that, you'd have 2 to 3% increases in productivity each year, and whether your wage was actually going up or not, you were getting 3% more each year, and hey, life is good. But people sense things, and this is not good. So then you wonder, where are those wages going to? Everybody's working hard. Well, of course, government has become bigger and bigger, and you got wasteful decisions. You got huge amounts of money going into nonsense like the boast that they can control the climate. I mean, no government in history has ever had that audacity and ego to claim they can manage the climate. Then the other one is the claim, the boast that central bankers can manage the economy, and they're beginning to discover that doesn't work so well. So the two great promotions by government forces, managing the economy and manage the climate, are fraudulent. And the public, well, let's put in, say, that veteran traders have known this for some time, or veteran geophysicists such as me have been skeptical of the boast that the climate needs to be managed, let alone that it can be managed. So it's just plain stupid, and this is one of the things that you can get when these uprisings come. And the last really important one was in Europe in the late 1980s, when the people looked at the promises of the communists and said, it's not working and you're out of here, and they took on the threat of tanks and AK-47s and shut down communism. The symbol of that was the fall of the Berlin Wall in November 1989, and which was very exciting stuff. And here you have had for the last decade the Democrats under Obama legislatively building the equivalent of the Berlin Wall, a throttle on freedoms. It's just an intrusion on this, and they're going to save the planet. A bunch of really good banners, but a lot of nonsense. So what you have had is the Obama administration legislatively trying to build the equivalent of the Berlin Wall. At the same time, you had the remnants of the old Tea Party and just ordinary citizens saying, we don't need this. We don't need to be instructed on every facet of our lives. So once it started to move, and Trump was a catalyst in this. He wasn't the move itself. He was the catalyst. And when he first announced that he would run and was condemning illegal immigration, things like that, at the time I said, this is a big service that he's doing to mankind, because he's the first one to get up and say a very loud no to political correctness. And it was breathtaking, and then it continued on. But the pieces I've written, I've taken the tone that the political uprising is the movement. It chose Trump as a leader, and has been successful. Now, earlier days in Trump's campaign, of course, he was all over the place, but I rested confident that the uprising would show him which way to go. And then his speech Friday showed that he understands it, that this is going to restore the political power to the people from experts and agencies. And so this goes back to I was feeling confident enough about it that on July 4th published the American Spring, and pointed out that the term goes back to the Czechoslovakia in 1968, when a popular uprising against the authoritarian communists brewed up, and they called it the Prague Spring, and they set in the tanks and the troops, and there was state murder, and it wasn't successful. Then there was, beginning a couple of years ago in North Africa, the attempt at an Arab Spring didn't work out. So it was exquisite irony to describe the movement as the American Spring, and then asked that essay, July 4th, asked the question, would the American spring be successful? And deliberately I answered it with a rural type of phrase, which is, you bet. And then this, of course, is what happened with the election, it was the country vote. Was it 85% of counties voted for the Republicans and Trump, and they voted for dramatic change? And the numbers I've seen is if you take the popular vote out of California, both Trump and Hillary's, Trump's still ahead by a long ways on the popular vote, but the election in the States is run on the Electoral College, and that was a sweep. And also with all the state legislations and state governorships, the Republicans are the strongest position since the 1920s. So the Democrat Party has been in decline under Obama as he pushed the limit on intrusion. So very exciting times, and I think it's just the start.
Bob, are you concerned for the Canadian economy? Because Donald Trump's number one message in his inaugural speech was buy American, hire American. Does that mean that Canada's frozen out?
I don't think so. We have the NAFTA agreement, and under it, it hasn't favored America that much because, first of all, it was an agreement by bureaucrats and for bureaucrats. Everything was negotiated. And then, of course, they allowed the privilege of central bank depreciation to continue. And that then you had the Mexican peso weaken, and you had the Canadian dollar weaken relative to the U.S., which is an enormous cheat. So who knows how much of the industrial capacity went to Mexico or was expanded in Canada based upon the cheat of depreciating currencies. So my view on free trade, which is the way to go, is that if Canada really wants free trade, then it should declare free trade in every direction, but it's going to be mainly with the U.S. anyways, and peg the Canadian dollar to the U.S. dollar so that there's no cheating going on. And, of course, when you have a nationalized currency, who does the cheating by currency depreciation? Well, of course, the government. And the whole point of a constitution is to prevent government crime, cheating, and all that sort of stuff. So when you take a look at Ontario, industrial Ontario, which has been suffering due to high land values, an insane provincial government with insane ideas about electricity, and then you compare it to Michigan, which has a depressed real estate and a depressed economy, and it's going to go dropping from extremely high corporate tax rates down to something, the proposal is 15% tax rate, and they're going to reduce the rules and regulations hugely. So you've got industrialized Windsor, Ontario there, and the labor unions in Ontario are going to take a look at what competitive nature they have with the Michigan just across the river. And, you know, the Trump revolution can come to Canada through the labor side. It's going to be fascinating. So, and these are market forces that you can't deny. So what should Canada do? It should work with the Americans, and I understand that Trudeau's government has already sent some people to talk with the Americans, to let them know that we're here. And I think a fair trade agreement can happen. Let's look at Trump as a bargainer, a businessman, and a deal maker. And, of course, you start off tough when he's talking all kinds of tariffs. But the end result, if you had a free trade and no cheat on the currency, hey, that's a good life, because Canadian industry, mining, agriculture, and all that sort of stuff can compete in world markets. So, and if Canadian business can't compete, it doesn't deserve to exist. And the whole point of a free economy is to provide goods and services at the most efficient prices. So I'm very excited about the change.
Well, one thing I just saw on television was one of the people Canada has sent south to talk to the Americans is Brian Mulroney.
Well, he can talk, and he's a charming guy, and I think he can help.
Is there anything else Canada should be doing to make sure that the Americans don't put up a virtual trade wall?
Well, I think just keep talking with them. And when you look at it, you look at southern Ontario, it more or less extends right into the United States. So, no, I think that if Canada really gets onto free trade and promises not to cheat on the currency, that is the best objective. Whether it can be obtained or not, who knows? But the other hand, you've had an economic expansion since the huge panic ended in 2009, and this is now in long-distance territory. This is a long-time expansion, and you've had, I looked at it, Jim, as a wave of optimism came in to the markets around June, and with the economy, and things are picking up in the U.S. It's good, and then you now have had a change from the most anti-business government that the U.S. has ever had to now the most pro-business government the U.S. has ever had, and with lower taxes, it's going to help our companies. But a lot of this is in the market. So, it's not been a secret of the changes that Trump is proposing. So you'd have to also consider the financial markets, the credit cycle. The latest for a year now, narrowing of credit spreads has been fabulous, very much positive, and you can see it because if corporations in the U.S. are allowed to earn more money, then their credit risk is better, and the bond, low grade and corporate bonds got marked up in price wonderfully. But then, as I say, it's in the market, and you have had a change in the yield curve from party time to, let's be a little careful, but there's been no change in the spread market yet. But one should also note that stock markets are pretty buoyant, and small business confidence is at the highest suddenly since November 1980 when Reagan won, which was an attempt to turn the U.S. back towards business. So there's a lot of positiveness in the financial markets. The economic expansion that began in 2009 is also now getting very long in the tooth. So there are the things to consider. Those are sort of implacable credit markets and business cycle. And then there's the excitement of a great reformation. It has the potential to be the greatest reformation since the early 1600s, when the last century of tyrannical governments gradually came to an end. So it's exciting times, Jim.
What guarantee is it that a Trump cabinet made up mostly of white billionaires will do things that will help the ordinary person?
No guarantee, because the Democrats will be opposing it. The mainstream media will be opposing anything that reduces the influence of big government. And big government thrives on ordinary people. And no, this is I look at the new cabinet as being executives rather than civil servants. And they will be forcing the civil servants. So they're talking about laying off 20% of federal government workers. So, no, this new government has the best interests of the general public. And what Trump said in his speech was that the movement is the public taking control of their government away from the hands of ambitious experts. And to me, as on the historical side, you had the Constitution of England, which is parliamentary and statute law and case law, and more or less unwritten, but it evolved to protect the people from those who would make government ambitious, and it didn't work. In the U.S., their constitution is completely paranoid and was also designed to prevent the ambitious from gaining control of government, and that one didn't work. So now it is a popular uprising that is going to restore the U.S. to sound constitutional government. And in England, of course, you got Brexit, where they're leaving a remote, i.e. in Europe, authoritarian government. So this will eventually be seen to be a global reformation, and I think the last great reformation involved a lot to do with religion, but essentially it was authoritarians against individuals. And they called it the Protestant Reformation, but I think it should be renamed the Great Reformation that began in the early 1600s and was ultimately successful. And what really made it successful in England was the glorious revolution of 1688, which is a popular uprising, very little bloodshed, and a transition that ended the last absolutist king in England. And here you have now. This is, I strongly feel there will be no bloodshed, and it will be the popular side of it will continue to grow. And as people will see that you have a sound administration, the popularity of the uprising will spread even further. So the backing of the political change, I'm going to put it a different way, Jim. The uprising has now gained control of the political processes, and then that will be successful. So we live in a wonderful time to be upright, vertical, cognizant, and watching what's going on. I'm enjoying it.
Bob, thanks a lot for chatting with us.
Very good.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Coming up, Danielle Park, next on This Week in Money.
Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome to This Week in Money, Danielle.
Thank you, Jim.
Everybody's taking a look at what's going to happen south of the border when Donald Trump is officially president. What does this pose to us for Canadians? What kind of a government can we expect to be dealing with?
Well, if the beginning are any indication, I'd say unruly and unpredictable would be the words that come to mind. Which, basically, Robert Shiller was quoted this week in the paper, the author of Irrational Exuberance and a number of books over the years on asset bubbles and all that. And he was quoted as saying at the Davos Forum, that he thinks that stocks are basically going mad again, just like they did in the tech wreck in 2000, and that, that Trump could send America into the next great crash, he says. And I think that's giving Donald Trump way too much credit. I think the situation in Canada today, our precarious vulnerability to economic decline has been the effort or outcome of many years now of bad choices and bad policies, which have caused us to be unduly dependent upon fossil fuels on the one hand, which of course we're paying the price for now in the swoon of the last couple of years, and also on the housing market and consumer credit. So those have been the two things that we have relied on in the Canadian economy, and we've built this house of debt, and that was way before Donald Trump came on the scene. So, I think we shouldn't give Mr. Trump all the credit by any stretch for the predicament the world is now in, for the weakness that has been brought on by debt abuse and aging demographics and, bad policies that favored banks and corporations over the financial health of the nation. But I do think that the precarious nature of his leadership, of his changing policies and ideas, his stance, swinging from one extreme to the next, that is a very unsettling feature. And, if you look at what it does for confidence, I think it would be a negative impact in general for spending. Like, we've seen very low business investment the past few years in all parts of North America, and I think that that's likely to be, the sober thought will say, gee, what is the policy? One day he's attacking pharmaceutical companies, the next day, he's attacking automakers, the next day. It's very difficult to know where he's going. And of course, again, no one guy gets to drive the policy. So, I think more importantly, what disturbs me about Mr. Trump's approach is his seemingly total disregard for the rule of law, which is so critical to supporting democracy and free markets and just, the business advantage that developed economies are supposed to have is partly to do with its entrenched laws, which are known and visible in advance, so that people can plan their life to be in compliance with them, so that businesses can make investments based on an understanding of where policy or how they'll be treated or what the laws of the land are. And when you have someone that's flip-flopping day after day and seemingly thinks he can dictate things, just decide he's going to tell this sector or this company that they can't do this one thing. It's a one-off ad hoc approach, and I think that's very negative for sentiment, as I said, and for that predictability that business likes to have before they part with money. I think it also ultimately, this whole talk about reworking NAFTA, I mean, the reality is that, Canada's exports to America are about $313 billion, or about nearly 77% of all our exports go to the U.S. The number one export for us to the U.S. is oil, which is about $74 billion of that $313 billion, and plastics, which are about another $11 billion of that number. So you've got about $85 billion of our export pie, which is of the money of the things we sell to the U.S., which is oil. And I think that the Trump administration is definitely going to try and double down on their own oil industry. And with the bump in price we've seen in the past while, we know frackers and horizontal drilling is all coming back online. So, if they're at all fiscally conservative and intent on reducing the amount of money flowing out of America, I think that would be one obvious spot. They would look to curtail the consumption of products from oil, both from Mexico and from Canada. And of course, as I'm saying with the numbers, that could be a negative for, certainly for our exports, which, the Bank of Canada, interestingly, was talking this week, and they are worried about the housing sector, worried about our over-reliance on, real estate, essentially construction and refi and, the commissions that are derived from transactions in that area. They're worried about how concentrated our GDP growth has become. Something like 60% of the growth in the last year in Canada has been traced. You can trace it back to that sector. And ultimately they're saying they're, looking for a rebound in exports, which has not come yet, by the way, even though we had a weakening Canadian dollar over the last more than a year, did not translate into a big rebound in exports. And I think that that's quite unnerving for the Bank of Canada. I think they're adopting a much more dovish outlook at this point, and concern that as I'm saying, at the margin, Mr. Trump could be negative for our exports, and frankly, it doesn't take a lot when we're as vulnerable and weak as we already are to have, that really make an impact in terms of slowing our economic outlook over the next year or two or three.
Should Canada be looking to expand its markets further into Europe and Asia?
Well, we definitely need revenue. And the problem with having a lot of debt is that it gives you less cushion or time to be thoughtful and reflective and make longer-term strategic decisions about where to invest one's resources. If you're sort of desperate for cash flow because you have to service a lot of debt and other commitments, you tend to, be more, less discriminating about where you try and get cash flow from. And I think that Canada could, no doubt, like there was the article in the paper about, how the Prime Minister took heat in the last week because he was saying that obviously we have to phase out, reliance on the oil sands over time, and Albertans went crazy because they didn't want to hear that. But obviously that's the case. I mean, clearly we need to diversify our economy and get to a product that the world is going to want and that doesn't have more cost associated with it in terms of environmental impact, cleanup costs. The funds that we have set aside to clean up the mess from the oil sands is that the companies have set aside is a fraction of what's required. So, you're calling it revenue in the front end, but really it's creating this huge liability and cost on the back end. So it's not an efficient way for us to get revenue. And, people that are dependent on it don't want to hear that, but that's the truth. So we have to figure out smarter things, and I think that means, more investment in new technologies. We have to develop more, second-tier products rather than just reliance on crude materials. So again, it's not something we can fix quickly. It's something we should have been investing in, in a very significant way over the last couple of decades. And it takes some time to sort of turn around. But I think, necessity is the mother of invention, and the more the more you see, like we've had the bump in the price of oil, which makes people hopeful that maybe we can just go back to doing things the old way. But the reality is that as soon as price bumps up, everyone has that much more, incentive to pump and produce and drill and frack and all of these different ways that you get that product, flowing into the world today. And so OPEC, said this silly thing about they hope they'll only have to cut production over the next 6 months, and then they expect to be able to lift that limitation on the production of OPEC and non-OPEC members. But in truth, that's a very unrealistic assessment, because that's already translating, the higher price bump is already translating into much higher production from these American and other sites. So, in the real world today, no one really has a cartel on that stuff. No one can control price, and the more we have this slowing demand, which I think Mr. Trump is likely to accelerate, not the other way around. And, the excesses in the financial markets, people have said, well, the markets like it, the markets like it. The markets are bananas. Every valuation metric that we look at suggests that we're back in full lunatic mode again, in terms of valuations, in terms of not just real estate, which is really bad in Canada, but also in terms of just financial products, whether they're securities, whether they're equities, whether they're corporate debt, whatever. Everything is so insanely priced that the Trump bump, so to speak, in the past, couple of months has only made that even worse. And meanwhile, you have this slowdown going on, mass uncertainty, and you've got the intellectuals sitting around Davos trying to postulate about the curious case of populism and why everyone seems to be so unhappy. You know, it's a very surreal time that we're living in. On the one hand, you've got 10 billionaires in the world having as much wealth as, you know, a third of the world population. And as I was writing on my blog this week, there is a direct correlation between the rise of financialization and globalization and the reliance on leverage, debt securitization, that blew up in 2008 and was reinvigorated and extended through QE and certain laissez-faire policies in the financial sector since. But there's a direct relation. This concentration of wealth in the hands of a few has been greatly magnified by financialization and securitization and all these trends of, in other words, you know, gutting the strength, eating the seed corn, pulling out all the savings from everyone's pockets and levering them into overpriced assets, while wages have continued to decline because of things like technology and the, you know, globalization of the workforce. So you've got people losing purchasing power consistently for the last 30 years through their work, and yet levering themselves up to keep consuming. And we've really come to that end point. So it's like everyone that was a benefactor of that largesse, from those policies and from the central banks helping, you know, the corporations and the finances, and from bailing out the banks and certain companies when they get into trouble. All that has really concentrated wealth, which was really connected to stocks and the performance of stock markets, into the hands of a few, and everyone else is left with the IOUs and the deficits and the lack of enough wages to pay their bills. And so you've got this huge imbalance going on in the world. And so the Trump bump in the last couple of months, you know, you can't blame it all on him, but he's, whatever the rationale of animal spirits, it has certainly magnified the problems and made it that much worse. So it's like a higher and higher diving board all the time from which this thing will mean revert. And when it does, you know, the problem is that people that are not prepared and don't see that coming are going to be left holding, you know, the junk assets as they implode once more. And we've seen how that played out already many times in history, but certainly lately in 2000 to 2003 and not 08 to 09. And, you know, the pensions of the world are left with the deficits, the savers of the world are left with the deficits, and the bankers make off like bandits again. So we'll have to see. Nothing Mr. Trump has done so far gives me a lot of confidence that he's going to be, you know, hard or a reformer in the ways that the economy so desperately needs today. So don't have a lot of confidence in that, but, you know, who knows? As I say, he's a very random feature, but I just don't think we should give him too much blame or credit at this point for anything that's going on in the broader economy, because this is something that has been baked in and built up for a very long time.
You're listening to This Week in Money. Our guest is Danielle Park, president of Venable Park Investment Counsel Incorporated. Danielle, some people have said to me Trump seems to have a 1950s point of view on the economy.
Or on male-female rights.
Maybe the same thing.
On all sorts of things. He seems to be fairly, but I don't know. I mean, I have no sense of the man, honestly. I have no sense of consistency. You know, what he said running is so glaringly the opposite of what he seems to be doing, even just coming into his inauguration and the team he's putting together. So, I mean, who knows? I really, really don't know. I mean, is it all, you know, stage? Is he just a TV personality? Like, it's impossible. There's no clear, you know, threads that a thinking person can grasp and follow there, at least so far.
What's your take on reality television star Kevin O'Leary running for the conservative leadership?
I think Kevin O'Leary would be a similar nightmare. I think he's the same type of character. I think he's, you know, he's the Wizard of Oz personified. I cannot imagine how he would lead this country. Again, the model, what I think, it's interesting, back to Schiller's comment, what I was writing about and what I mentioned at the start of our talk about Robert Schiller talking about that there will be this, in his view, that this secular period of extreme overvaluation, which is something that I write about all the time, he thinks that it will end in this, Gatsby-like collapse like we saw after the Roaring Twenties and the day of moral judgment. And I think the cathartic effect of that will be a revulsion against these self-interested characters who take and pretend and extend and, use all sorts of gimmicks and even fraud, many of these people, to, like in the banking sector and everything we've seen over the years, all the breaches of the law and the paying of fine and the getting off without admitting or denying. I think that whole brand of people will become repugnant in the end of this cycle. And so I think Mr. Trump and his cohorts who have, queered rules in their favor and, been relentlessly inconsistent depending on where their own best interests lie in their decisions on things over the years, I think that's the kind of person that will go out of favor. And I would have to consider that that Mr. O'Leary is a similar character type. So, whether and how long this goes on before that final catharsis and blow up and revulsion of those characters, it's very impossible to say, but it could be a lot faster than people think. I think the tolerance and the patience has been running thin for a long time now in the world. Certainly Christine Lagarde, the head of the IMF, was saying that she gave a speech at Davos in February of 2013, so 4 full years ago, where her speech was about inequality and how this extreme wealth and poverty in the world is really undermining stability and is the number one risk to world order. And she said at that point 4 years ago, everyone sort of pushed back and came up to her and said, I think you're right off. I don't think that's the issue at all. I just think that prosperity is spreading and everyone's doing so much better and blah, blah, blah. And then she said this week that that is the topic this year. In February 2017, the main topic at this economic forum in Davos is what are we going to do about this rising, quote, populism and, instability and, the race to anarchy that is going on in many of the countries in the world where they're just full out rejecting what has been the dominant status quo. So anyway, so who knows? We'll see. But I think we'll know we're at the end of this particular episode of secular madness when we get that washout, when people are arrested that have been breaking the laws, when you have a cry for justice and prosecution of individuals, not just hiding behind corporations, and the pendulum will swing the other way.
We're speaking with Danielle Park, president of Venable Park Investments Council Incorporated. Check out our popular blog, Juggling Dynamite. Danielle, how should a person measure their success with their investments?
So that's an excellent point. And I would submit to you that it's not about what markets do, which is what the media and the financial commentators and companies like to talk about all the time. They always focus on, this asset's doing that or these markets have gone up this much and that sort of thing. But really, it's not about what asset prices do. It's about what you capture and keep over each full market cycle. So in other words, it's a function of most people. They just, plop money in, ride these cycles up, and count the gains as their financial acumen or the genius of themselves or their financial manager. And then when the mean reversion comes, which is essential to every cycle and it's baked in, it's always a part of the experience, the mean reversion hits and then they distance themselves, say it wasn't their fault, it was unforeseeable circumstance, and they end up giving back all the upside and more, usually in the downside. So the art of this is to try and keep your savings carefully growing forward through the full market cycle, not on a wild tear up and a big crash down. Because not only psychologically and emotionally is that devastating, but as time goes on and you get older, you have less ability to ride those waves and wait for that to come back. The other thing that's really critical, and I think people just don't grasp it today, is not only are we 8 years into an economic cycle and well overdue for the next bear market or correction phase of the market cycle, that began in 2009, the upcycle that began in 2009. We're way overdue for the mean reversion period to follow. But not only that, we are now also looking for the final catharsis or the final end to this period of extreme overvaluation that began from the market peak in 2000. So this is a secular period I'm talking about. Secular periods extend over more than 1 or 2 market cycles, typically 3 or 4. And so the problem with the final cycle, when you get the final decline and retrenchment of extreme overvaluations, is that can often take 10 years or 15 to 20 years to complete from the first peak to the final bottom. And then once it reverts below the mean in terms of valuations and prices, it can labor there for 10 to 15 years before it begins to sort of reinflate. And I think that's what people don't understand. So while they're wildly riding this bull and thinking, oh great, we're making money, but they have no sell plan, discipline, or rule set to take money off the table, their plan is just to hold the stuff and collect the income off of it. They're not paying attention to the capital risk, and they don't appreciate that when the mean reversion hits, it takes away all the upcycle, and usually more. In a secular bear, it can take away a lot more, and you could end up with big holes instead of savings. So I say you should measure your success from the market trough to the market trough. So, we haven't got the second market trough since 2009 yet, so until we get there, you really won't know how successful your strategy has been at growing and retaining your principal over the full market cycle. Too often people measure to the peak and they forget about the other critical part of each cycle, and that's the downtrend. So the art of it has to be to try and participate in the upcycle, and then to step aside, and then to have liquidity to try and buy near the market trough. And that is not easy to do, but it's essential that you have some methodology to try and do that, because especially in these extreme pricing cycles that we've seen since, the 2000 peak, we've had that one and then the 2008 crazy peak, and now we're back there again. When they do mean revert, they take away 12 and more years of gains in one fell swoop, in a matter of months often, with this kind of leverage. And so that means you really have to, you can't decide you're being successful just because you're in the upcycle. You have to always measure in terms of how you've made out over the full cycle.
Is it sometimes a good idea to just stay in cash and forget about trying to make quick, huge gains?
Well, that's exactly it. So I was writing about it a lot on the blog this week, just explaining to people that, it isn't true that cash is trash. That's the industry telling you that because they want your money to stay in their products, paying them their fees. Cash can be the essential strategic tool, especially in market cycles like these that are so overinflated and full of great leverage. Cash is the only thing, really, that you have that will likely not decline in these downturns, and it'll afford you the ability to buy things when they're finally attractive. Because in the end, everybody's desperate for cash because everyone's become over-levered. And we know that cash levels in mutual funds today are below historic lows. They're about 3.5%. Now, historically, mutual funds don't hold a lot of cash, something like 5%, but at the margin, you can see that they even have less liquidity than normal today, so that when people start trying to make redemptions, they're forced to sell assets, and the forced selling is what crushes the prices in the end. And so you don't want to be trying to hold that stuff when the herd decides that they need to get out or need to raise cash. So it is, you really can't afford to passively hold and ride these cycles, not at this point. Someday we'll get to a secular bull period again where valuations will start from very low levels, and it'll be an entirely different climate. Yields will be much higher, and when we get into the pullback cycles in those periods, they tend to be more sharp, more short and shallow. But during secular bear periods where valuations are so extreme as today, they tend to be deep and long when the declines come, and that's what you have to avoid at all costs.
Are you encouraged at all that there have been arrests for Volkswagen for its emission control scandal? They were fined billions, but maybe somebody will face criminal charges. Fiat Chrysler now under investigation for cooking their emission results. On one hand, they have gone after these people, but do you feel there's still a culture out there where major corporations really feel they can do anything they want?
Oh, absolutely. And Takata Airbags, they've arrested some executives there. So yes, I think and I've been calling for this for a number of years, right from in 2008 with the bankers, when they were able to acknowledge great mass fraud and yet no individuals were arrested. This is a great failing of democracy. It's a great failing of the rule of law. It's a great destabilizing influence in the society because people say, wow, the rich people or the higher ups, the executives, they're getting away with murder, so why should we care about following the law? So it is a very disruptive force. It's part of the failing of the Obama administration, in my view, where history handed them the opportunity to make change and have prosecution of individuals and hold people accountable, and the administration decided not to go that route. I think that is part of the foundation of the very populist wave that brought in Donald Trump today, that brought in Brexit, that is, sort of unsettling the governments around the world. It's that this extreme inequality of justice. And, regular folks are prosecuted for the smallest things, and if you're wealthy enough in the world and with a big corporation today, you have got away with everything. So, yes, I think it's the thin edge of the wedge. I think that they'll have to do a lot more of that. They started with, prosecutions against car makers. What they really need to do is a lot more of that because it's clearly fraud and the companies have admitted it. And companies don't run themselves, Jim. You know this. I know this. Corporations are directed by human minds. It's essential that we hold the humans directing the corporations accountable because so far they've been able to get compensation based on financial engineering, which has made them extremely wealthy, and they've had no personal culpability or no personal responsibility for the actions that have caused so much harm in the economy. So this is definitely a wave. This will be part of this catharsis that Bob Shiller is predicting. In every so often in human history, you get these payback phases where all this behavior that was condoned and tolerated for many years is suddenly intolerable, and you get a wave in the other direction of prosecution. So, yeah, I think it'll have to, there needs to be prison terms for some people. There needs to be a clawing back of the proceeds of crime. That's a critical one because so far cost of doing business fines have no deterrent value whatsoever on this kind of behavior. And they wouldn't for anybody. If you're prepared to commit these crimes and you're compensated with millions of dollars in promotions, clearly that's a great incentive for people to continue as usual. So, yeah, I think it's a start. I think we'll see a lot more of it, and it's overdue.
Danielle, thank you so much for being on This Week in Money.
Hey, thank you.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. She's also the president of Venable Park Investment Counsel, Incorporated. Coming up, Peyton Nyquist next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
We're chatting with Peyton Nyquist. He's a Vancouver investment advisor at MackeyResearch.com. Welcome back to the show, Peyton.
Hey, Jim. Thanks for having me.
How did the Canadian equity markets do over the past week?
The TSX had a low of 15,366. High was 15,773, closing at 15,547. The TSX Venture had a low of 788. High was 800, closing at 797 for the week. And the CSE had a low of 817. High was 837, closing at 834.
What was the big driver behind the Canadian markets the past week?
It's kind of been bouncing around this week. The gold's continued to recover, which has been a big part of it. The marijuana stuff continues to be interesting. But I think just an overall move up from the beginning of the year.
And, of course, too, we have the big mining investment conference at Cambridge House coming up in Vancouver over this weekend. Is there chat about that? I understand attendance will be twice what it was last year.
Yeah, I think guys are very optimistic this year in the resource market, so there should be quite a good turnout for that. And there's a pretty interesting list of candidates who are there doing speaking and also presenting companies at the show.
Peyton, thank you so much for chatting with us.
No problem. Thanks for having me.
My guest has been Peyton Nyquist, a Vancouver investment advisor at MackeyResearch.com. That wraps up our show for this week. We'd like to thank our guests Bob Hoye, Danielle Park, and Peyton Nyquist, and thank you for listening. Stand by for a company showcase update with American Manganese President Larry Ray. Any questions for our show can be emailed to info@howestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. We're speaking with Larry Ray, CEO and President of American Manganese, on January 19th. Larry, what kind of an update do you have for us this time?
Well, Jim, we just put out a press release on what the actual value of cathode material was in an electric vehicle battery, lithium-ion electric vehicle battery. And it gives you an idea of why we're doing this. Number one is there's two reasons. First, we got to think it's about the circular economy and the environment. But helping the environment doesn't work if you can't make money. So what we did is we took some of the more popular chemistries of the batteries out there, and we published what the values were for cathode material in most batteries. And our aim is to eventually have 100% recovery of all that material. So that it should, certainly give the shareholders something that they can mull over, because when you're talking about recycling, it's got more to do. A successful recycling program has more to do with the economics in order to help the environment. And so this is just a real basis for it. For example, the Model S battery that Tesla has about $3,745 worth of cathode material in a battery that would weigh roughly 1,000 pounds. And almost 3,300 of that is the cobalt. And about 465 of it is the lithium. So you look at that and say, well, I mean, if that was a ore deposit, that would be a fantastic grade. And so we look at this as mining batteries, and we think that that the values here should certainly support a recycling program. And we can't say that it will support, but it should support. We know that we're working from a good foundation. Let's put it that way. And there's also another little thing that's in here that we've got, and that is that there's a hazardous waste tipping fee that comes in with these batteries. And and that roughly runs from $3 to $7 a pound, depending on the geography. Now, we used $3 a pound, the low end of the scale. So on a 1,000-pound battery, that's $3,000 you get just to take delivery of the battery. So the numbers I just gave you at $3,700 on a Tesla Model S is actually could be as high as 6,000 something. So you've got a lot of leeway. We know what the metallurgy works, how the metallurgy works. We know how the recycling of the cathode material, once it hits the metallurgical section, how that all works. And that gives us a lot of money to look at. How are we going to deal with the actual shredding of the battery, or actually dismantling the battery and reclaiming the foils that contain the cathode, which should be aluminum foil, and the perhaps even the anode material, which is on a copper foil. And, if you build a battery, there's a lot of robotics involved. If you can build a battery, you can certainly take it apart a lot easier using a lot less robotics. And that's kind of the way we're looking at it now. But that's going to come up at a later date, and then we'll know exactly what our costs are going to be, what our operating costs will be, and everything else. But right now, our major function is let's protect the company and the shareholders and get these patents airtight, and that's what the ongoing work we're doing now is to do that. And because there is a lot of value in the batteries. I've seen a lot of articles out there where people are talking about there's not enough lithium in the battery to justify, the recycling of it. But they seem to kind of throwing the baby out with the bathwater here when they're not talking about the recycling of the cobalt cathode material, the nickel cathode material, and even the lower end of the manganese dioxide cathode material, and the aluminum. So, we've got a scale that runs on 3 different battery types, and the lower end of the scale would be the nickel, cobalt, aluminum battery, which still comes in at a very robust over $1,300 a battery. And then if you add the tipping fee on that, then you're looking at $4,300 a battery. So what we wanted to do was just to show the shareholders that we're not pipe dreaming, that this thing looks like it could be very, very robust. And that's kind of what the message is that I wanted to get out, Jim, was, they can do their own work, and they can estimate what the shredding's going to cost, and, we'll have a number on what it's going to cost to do the metallurgy. But it shouldn't be any greater than a mining cost for hydrometallurgy. So it's an exciting project. It just looks better and better and better every day. We just got a grant from the government to assist in some of this work. And, that gives us, I think I had a last discussion we had was on credibility. But as we move through the chute, this thing becomes more and more the likelihood of it being viable is getting to be more and more apparent.
Up until this point, Larry, were people very concerned about what they would do with these lithium batteries once they'd been used up?
Well, I don't think that the car companies have given enough attention to that. There's 2 reasons why they should, especially if you're using cobalt. And that is that, as a recycler, you could guarantee your supply of cobalt. And also, if the pundits are right and there's a scarcity of lithium, then you could guarantee your supply of lithium. But these batteries are classified as hazardous waste. You have to have permits to move them. It's not, they can't go into a landfill dump or anything like that because they could contaminate the water table. They could contaminate everything. And So recycling, which hasn't been at the top of the list of things to do for battery manufacturers and car manufacturers, is starting to move to the forefront now. And when you have places like China that have legislated that they have to have a very workable recycling program before they're going to be allowed to build batteries or to import batteries into China. And that includes the vehicles that use them. So it's coming. We're going to see that here in North America. We've seen it. It's in some isolated places it's already in effect, and the same thing in Europe. And in some isolated cases in Europe it's in effect. And so, these are all good things to, that point up for our recycling. If we were to license out recycling, we could have plants all over the world.
Larry, where can people get more information about American Manganese?
They'd have to go to our site, which is AmericanManganeseInc.com. They could phone me at 778-574-4444, or they can email me at LREAUGH@AMYMN.com.
And where does American Manganese trade?
Trades on the Venture Exchange under the symbol AMY, under the Toronto Venture Exchange, and it trades in the pink sheets in the U.S. under AMYZF, and it trades on the Frankfurt Exchange under the symbol of 2 a.m., 2 o'clock in the morning.
Larry, thanks a lot for the update.
Thank you.
We've been speaking with Larry Ray, CEO and President of American Manganese. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.